Chapman, all it is the 22nd of May. I just got back from Miami. I was out there for the IMN conference, listened to a lot of folks talk about what they think is going to happen in the market. And what happens a lot is really just people's ideas from their own perspective. I know there's big macroeconomic thought processes, but in my personal opinion, we all have a lot of microeconomic thought processes that can be different than what the macro is, right? Each person's microeconomic situation differs from household to household. Now, there's some generalities that we're all experiencing with, inflation probably being the number one thing we're dealing with. Expense is much higher than income, just the way things are. Expenses keep compounding. Income is not, to the extent that the expenses are when you look at what's happening out there, especially with energy inflation right now. And over the last 5 trading sessions, we've been caught between two major forces of persistent concerns of inflation and, of course, the shifting Federal Reserve outlook under the new Fed chairman, Kevin Warsh. So that has kind of created a lot of volatility. We'll get into that here in a little bit. First off, was at two podcasts, one in Miami, one in Jacksonville this last week. So I was running around meeting with a lot of folks that I knew, interestingly enough. They're at the IMN conference. Then also 2 podcasts. Had to do a little bit about this, but then just my outlook on what's going on with the market and where things are heading. And then there's more podcasts to come. So there's a lot more bookings coming up. So that's something we'll be getting out. You'll see that starting to hit my Instagram page probably mostly. And other forms to be able to connect you up with who those podcasters are, so we can kind of watch those shows if you like. Getting deeper into philosophical things more so than the markets in those podcasts, talking about my direction, where I'm heading with my investments, what I'm really looking at, what I believe to be a successful investment venture, and my successful portfolio is going to be vastly different than what some might think. So that's something you can tune into some of those when they come out, hopefully in the next couple of weeks. But let's look at the market, because that's what you come here for, so I can communicate to you. That's why I even started this, not to get a bunch of followers, not to get a massive amount of likes. It's fine if that comes. But for those who are in the middle of a transaction right now, you can see real time what's happening in the market and what's driving interest rates. I started this when COVID hit because of what it did to the market. Hard to talk to everybody about those rates at the time, or against just continued since. So let's go ahead and share with what the charts are showing to us right now. So as I indicated, over the last 5 sessions, right here, we've seen that volatility. Look at how much volatility we've seen there. And you got the inflation piece, you've got the thought process coming from Kevin Warsh, all those things pushing rates hovering right now at 9-month highs. So let's look back here. Let's see what we've got here. The MBS, I'm going to have to shrink it a bit here. So if you're looking at this point here, we get back to this, goes all the way back to July is the last time we touched this. That was a fast drop from its best point ever in February. Not ever, but really when was the last time we saw that? The last time we saw that was September 24. So it's been a while since we've seen the levels that we saw in February. And then, of course, we went back to lows in the market, highs in the interest rates from back in July of last year. So that's a big swing that we got to experience here. And as a result of all that movement, we've seen it find a bottom, which is something we established way back. I don't know when I set that particular floor up, or it would have been a ceiling at the time back in here, and then it became established as a floor, and now it's as a floor here. We got ceilings coming up above us here that we're really sitting right on. I probably should just turn this right to a red label here, because it's going to act as a ceiling to us. And so we've got that area we have to get through. So there's going to have to be something, and it's got to be stabilization in some form coming from inflation. Inflation is going to continue to persist. We're going to continue to have more, probably, potentially, if we have this inflation continuing, a raise to the rates on the federal level, which could be rough. It could it not be something we want to experience. So that's something that could happen if that is persistent. But I think what we need to have is probably some sort of settling in the Middle East. That starts to settle, oil prices go down, we lose some of that pressure, we might see a little bit of improvement here, but we're not going to see the improvement that people want, right? Let me go back to the chart here. A lot of folks want to see, how are we going to get our interest rates back in the 5s? We have to get above this 101.50. It has to get above that. Look at the history of that line right there. It has to get above there. And the only time it did get above there was when we had quantitative easing. I don't see the Fed doing that. Quantitative easing started here. It was announced here. It has to be something that they talk about for it to get above the line we are right now, that we have as our ceiling. So that being the situation, we are not going to see those rates anytime soon, in my opinion. But when you get up into this area between 101.50 and 100.55, that's the area where you need to be cognizant of locking and protecting it, because getting up here above those lines are going to take the federal capital trillions of dollars, and I just don't see them doing. So that's where we're at right now. Again, 22nd of May. We'll talk to you on Tuesday and let you know how things are.